Hello, everyone, and welcome to this roundtable that is part of the SaaS Banking Summit Brazil. I'm Angelica Mari, I'm a business technology journalist, and in the next half an hour or so, I'll be moderating this discussion on the opportunities, challenges, and learnings around open banking. So this is a model that's been described as the future of banking, with consumers having ready access to lots of services, fewer logins and passwords, and better security. So what's not to like? Open banking has also been described as a set of standards intended to do the same for banking as app stores have done on our smartphones. But that's not necessarily a simple endeavor. We will find out more about that, the learnings in open banking in areas around analytics and fraud from more mature markets and how that's been evolving. We will also hear a little bit about what's ahead for countries like Brazil, where open banking is currently being rolled out. In order to do that, I'm joined by a team of experts who will be sharing insight throughout this event. So before we begin, I'd like to welcome them all and ask them to introduce themselves briefly, starting with Alex.
Angelica, thank you very much. I'm Alex Kwiatkowski, and I'm the SaaS industry lead for banking and capital markets.
Excellent. Carlos, would you mind introducing yourself to the audience?
Sure. So hi, Angelica. Hi, guys. So it's a pleasure to be here. Thanks to invite me. So my name is Carlos Soveni. I'm responsible for the fraud and security intelligence team for the EMEA market, Europe, Middle East, and Africa market.
Perfect. And finally, Sandeep, would you mind introducing yourself to those following us here?
Sure. Hi, Angelica, and hi, everyone. I'm Sandeep Tanga. I am a financial crime specialist based in London, and I'm part of the global financial crime team here at SaaS.
Excellent, brilliant. A very warm welcome to all of you. So to start us off, Carlos, you're being democratically chosen to kick us off here. And in order to contextualize our conversation, could you give us a brief summary of what's open banking and what it means for financial institutions and customers?
Sure. So let's talk a little bit about the open banking for our market, right, in Brazil. So it's basically a set of rules on the usage and sharing of customer financial data between banks, and this basically consists of, so first point, use of an API or APIs, right, that allow developers, so meaning here different companies in the market, to create applications and services around financial institutions. Two, also important, more flexibility for account holders. So from open data to private data. So for example, account holders will be able to approve that a third-party company have access to their bank details. And with these, it will be possible to concentrate all the financial management in a single application. And this could be done by a website, for example, or an app on your mobile. So much more flexibility than we have today. But the main key mindset is the usage of open source tools to achieve what I mentioned before, right? So the benefits in general for the customers, it allows you to better manage your finance and also get better options of investments, for example, right? And for the banks, an open door to improve the relationship with their current customers.
Mm-hmm. Alex, just based on this broader scenario that Carlos just described, you've been following the financial services and banking industry for quite some time now. So I'll be interested in hearing from you how the markets where open banking is in place already, like the UK, have evolved since the introduction of this approach.
Yes, Angelica, the grey hair that you can see on the screen does show that I've been around this subject for quite a number of years. But from the very beginning, I always described it as something that was going to be kind of a slow burn rather than this kind of raging inferno. If you spend any time around the banking industry, and particularly kind of the discussion around digital transformation and the future use of technology, there can be a lot of hype. Open banking hasn't come with a lot of hype, it's just come with some expectations. So although some markets are a little further ahead than others, and you mentioned the UK, we can look more broadly across what's happening inside Europe, that slow burn, that's really what's continuing. So the last few years have been characterized by laying down the foundations, making sure that banks are actually able to deliver the expectations of more open banking services, the interactions, the sharing of data with third parties. So rather than talking a great game, but never actually delivering it, what's happened in the most recent years, places like the UK, it's been the preparation phase. I know Brazil is going through something similar at the moment. But what useful learnings we can take away already is that, similar to some of the other initiatives that have existed around payments, and if we think about things like contactless payments or mobile payments, is just because the technology is there, the capability is there, it doesn't mean that consumers are going to go rushing towards it like it's the best thing they've ever seen, ever. That slowness continues. But as what we've found is that banks have become progressively more comfortable doing something which a few years ago would have been unthinkable. What? Share data with somebody else and we can't profit from it? This is madness. But actually, to think of it a different way, which is a much more outside-in view, which is give a better service to customers, get them to think more favorably and maybe about their existing bank because they see the bank as being sharing knowledge and data and information that can benefit the customer and make their lives better, that's quite acceptable. But so I would say that although we've had open banking now for some time in markets like the UK and others, for sure we've got some learnings. And some of those learnings are more kind of the technological, the operational, the adjusting to the regulatory requirements, rather than saying, here is the blueprint. If you build this, success is guaranteed to follow. And so although the UK is probably the most advanced market for open banking anywhere in the world, it is still at a relatively early stage in its development. So thinking back to that slow burn, not raging inferno, is we're just going to make nice, progressive, stage by stage growth and progress, rather than suddenly going, we were here one moment and before we knew it, we were there. No, it's a little slower than that. And it means that if you're a bank about to embark on your open banking journey, if you're a third-party payment service provider or somebody else involved in the ecosystem, it is a race, but it's not a race that you've got to win like the 100-meter sprint in the Olympics. Think of this more as the marathon, maybe even the ultra marathon, rather than just being over and done with in less than 10 seconds. So I'm interested to see where open banking goes next. Here in the UK, more widely across Europe, to what's going to happen in new markets coming to open banking like Brazil. But to say that it is the future of banking, you said that in your opening remarks, that's right. But the future of banking isn't only about open banking. Open banking is just one element in a kind of multi-dimensional future that banking is having to adjust to. So I'm not sure whether I quite answered the question in the way that you were anticipating, but for me, it's hard to define to say, here is the success blueprint. Now, Brazilian banks, go and take this and be successful. I think we're still at those early stages of figuring out what works really nicely and what is something which might work well in the future, but doesn't necessarily work quite so perfectly at the moment.
Sure. We'll go into the aspects of changing consumer mindsets and what it takes for them to be embracing that kind of model. But just briefly, Alex, does that slow burn translated into more IT spend?
I don't think it's translated to more IT spend. I think it's about taking a pragmatic view and thinking, how fast do we have to go here? Can we go at a pace which, instead of just developing kind of monolithic technology, can we actually think about this more broadly, this transition to open banking, as part of the wider discussion, which has already been taking place, not just discussion, not just talk, but action around digitalization, around transformation, around the evolution that banks have had to go through as they've needed to keep pace with what's been happening in the rest of the world, as the world has become more driven by data and more digitalized. So banks were already having to invest in technology, in digital transformation, and done correctly, it should always be with open banking in mind. So you wouldn't be building things that are closed and proprietary and that are hard to have the application program interfaces linking to. Most banks, I think, have figured this out, and so no one's had to put the vehicle into reverse and suddenly go back and start from scratch, because this open API world, the use of applications, the use of, you mentioned app stores in your opening remarks, all of that was already in banks' thinking. It hasn't translated through to having to invest massively more in new technology just for open banking. If that has been the case, I'll whisper it quietly, you've probably done something wrong.
So if you were to drill down into the details of that technological advancement, Sandeep, I'll be interested in hearing from you. What are the data analytics requirements that organizations from the financial services industry are having to meet in this new context of open banking?
Sure, Angelica. I think it's a great question, but I'd first start by saying that, regardless of open banking, there's a very high need for the increased use of machine learning, of data analytics, and the wider artificial intelligence as well. Now, as Alex has mentioned, most banks are onboarded on a digitalization journey. So they're actually, digitalizing their channels, their processes, the way they onboard customers. And that's an area where really, the use of data analytics and artificial intelligence can add a lot of value. So I think overall, what AI helps us to do is to sift through very high volumes of data and really enable banks to make instant real-time decisions. This will obviously apply to the concept of open banking as well. Now, as Carlos has mentioned, with open banking, on top of the traditional channels, you will now have new players, new actors in the ecosystem on which you know little to nothing about. And also on top of that, you're bound to see new behavior on this new channel as well. And the demographic will also be different, at least in the starting phases, around open banking. So it means that you have to adapt. You have to adapt the way that you look at data, and you have to adapt the questions that you ask off the back of this data as well. Now, we all know that nowadays, with the huge amount of data available online, with big data, with this kind of sheer volume of digital data, digital channels, digital products, it is not feasible anymore for banks just to throw in resources to get the insight they need. And that's one area where really artificial intelligence and AI and machine learning can really help to kind of shed some light on the problem. I think what's going to be really interesting as well is the use of AI to analyze those behavioral patterns, to really help understand what normal behavior is and what abnormal behavior is. And abnormal behavior, all these outliers in the context of open banking, can often, many times, be synonymous of fraud. And that's one area which the regulations here in Europe are focusing a lot on. It's a lot of focus on obviously providing a unified market for better payments, for innovation, for more consumer choice, but it's also about providing an ecosystem where you have a higher sense of security and safety around transactions. So I think really the use of data analytics will be used to focus a lot on that, on focusing on providing a frictionless customer journey, on preventing fraud, on preventing things like account takeover, and overall help avoid those those anomalies around data and to stop fraud in its tracks. I think on top of that as well, beyond the fraud paradigm, we can also look at the likelihood of adverse behavior, like overspending, for example. I think many customers have fallen victim to overspending, and nowadays with COVID-19, with the very tough economic situation globally, I think the use of AI can be used also to optimize the way that consumers spend their money. So having maybe artificial intelligence mechanisms to prevent overspending, to optimize financial responsibility, to ensure that, for example, you have enough funds in your account to ensure that you can pay your bills. So all these can really, help deliver a better consumer experience as well. And the last thing I would say is we've often heard of banks operating in silos and having different lines of businesses, very segmented approaches to looking at their landscape. I think that's one area where really data analytics can really help. So help provide that bigger picture, that unified 360 view of the fraud landscape, of the customer, the single customer view, basically, to help make better decisions. So in short, I think data is extremely valuable because in many ways that's the fuel for making the right decision, and having that way of interrogating the data, asking the right questions, getting the right insight is critical for making the optimal decisions, more so in the context of open banking.
But I guess in order to do that, you need to be able to advance your digital transformation as well, I would think. So I would be interested in hearing from Carlos. What are your views in terms of how organizations from the financial services sector have been able to reconcile the complexity of their systems, the issues relating to legacy IT with these new data requirements emerging from movements like open banking?
Sure. Yeah, honestly, Angelica, that is a really good question. So we have many different examples around the region I'm managing today, right? So, and also I'm more a business professional than a technical. So I will give you my personal, let's say, / consumer experience based on what I'm seeing happening today around the European, Middle Eastern, and also African banks, okay? So being really practical, there are two possible approaches for that. So first, build your bank from scratch, right? So there are several banks today in Germany, UK, and other mature markets taking this strategy to build a more simple and digitalized bank to their customers. So from scratch, right? So this is not the best approach, as said by Alex, so, and I completely agree with him, but it's not a strange path to take, So we can see also a lot of big banks buying other small, high-tech and innovative banks in the market. And of course, these accelerate a lot the process of this transformation, right? Second, invest and move your technologies to be cloud-based, right? So mainly ensuring your core system is in a platform which allows you to easily connect with other APIs, as we said before, right? And external data sources in real time with low costs of services to keep these running and working.
So I think this concept of leaner, more agile, cloud-based organizations is a good segue to for my question to Alex on the increasing competition that is one of the goals of open banking. So what can organizations do in terms of how they use their data to attract and retain customers?
That notion of kind of increasing competition, you have to ask whose goal is that? Banks, existing financial institutions are probably quite happy with the market as things are. What we've seen is that it really has been the decision of politicians, especially in retail banking, thinking, I know what we need, more banks. Let's have more choice. And that's an honourable idea. But what it's actually shown in reality is that, yes, you can launch a bank. It's never been so easy as it is right now. But just because you launch it, it doesn't mean it's going to be a success, because you've got to make a persuasive case to mean that people who are banking in a traditional institution are going to want to move their money, whether it's their primary financial relationship or a secondary or a tertiary relationship, to this new provider. So what can you do that makes it attractive? Well, the whole point of open banking is that you can start to have other relationships that will be enabled by that financial data. So, for example, if we think about in our consumer lives, chances are we've got a relationship maybe with a telco, whether they just provide us with mobile services, maybe it's a full package of services with maybe television, other entertainment, all thrown in. So open banking starts to become useful to consumers when my data is shared with my telco provider, and then someone says, Alex, we can do better. We can give you a much better deal. Or someone looks at my data and says, you're paying too much for your auto insurance. The point I'm making is that there's got to be something in this for the consumer. It's not just about a good experience, it's how's it going to make my life better? How is banking going to make it easier and better for me in this openness that we're all living in, that means that I can go, that's great. I'd love to save myself a few pounds or dollars or whichever currency you care to look at. So there's got to be this careful kind of positioning. And this is why perhaps outside of the industry, open banking's been flying under the radar. Ask people inside of banking about open banking, and they'll probably have an opinion. Ask a consumer, ask my mother about what open banking is, and she will just look at me blankly and say, open what? Because open banking is more of an inside activity inside the industry right now, but for it to be successful, and this is about its long-term success, it's about how you can then position it so that consumers initially, maybe small businesses, small enterprises that don't have a lot of excellent service from banks at the moment, they can also be beneficiaries of this. It comes down to what's in it for them. So all of this competition, new licensed banks, great. But how are you going to differentiate? How are you going to attract? And once you've attracted customers, how are you going to retain them? And the ability to do more with the data, because open banking only exists because of the data. Data is what enables open banking to be a concept in the first place. And Sandeep, I love the point that you made around the use of artificial intelligence and the benefits that that brings. Angelica, let's frame it like this. Banks are going to have to get used to doing things that they have not done before. They have not shared data with third parties. Many banks, whether you're in Brazil, the UK and elsewhere, are not necessarily using artificial intelligence and machine learning everywhere in their business today. So make no mistake, whilst it's a kind of an under the radar initiative, mostly known by the industry, it is causing banks to think about things in a different way. But they've got the luxury of being able to take their time to get this right. And we just saw this in Brazil, didn't we? Where there was a pause. I think there was the implementation of the second phase only went live. Angelica, keep me honest.
Nearly a month later than what was previously anticipated.
But it hasn't hurt anyone. That little delay, if it means that it then goes correctly, means one step further, one step closer to a new industry doing different things. But we can get there. We haven't got to get there, as I said before, in the blink of an eye. We can get there progressively, but we have to get there. Not going to open banking is not an option.
So we talked a bit about the opportunities, but let's go a little bit deeper into the risks of that data sharing activity. Sandeep, what are the main fraud-related issues that can emerge within companies in this context of open banking? And how can these companies, banks, financial services institutions, how can they use data to mitigate that kind of risk?
Sure, I think that's one of the points which was really heavily debated in many countries where open banking is being discussed, So fraud is definitely an area of concern in the industry around the sharing of data, around opening up to new players. But we have to remind ourselves of one thing, in many ways, open banking is simply a new channel. What you obviously have new actors for sure, which does spell out more risk, the risk of the unknown. But at the end, you always have the same instrument being used. It's the same card, it's the same bank account. So the types of fraud that we tend to see aren't massively different to the traditional banking we are used to. Is simply a new channel. And luckily so far, it could be due to the low uptake of open banking services. It's not really that big ripple in the industry. As Alex has mentioned, very few people know about it or use it. It tends to be a younger demographic who are a bit more tech savvy, and they just want to try it out basically, because there's so many ways of making payments easily nowadays. And even traditional banks have optimized the way that they offer payments. So it's often easier doing a payment or making a payment with your own bank than having to go through the trouble of using a Facebook account to make a payment. Some people do it, but in essence, it's not that popular yet, at least. So back to the question, I think the fraud issues that we see are going to be very similar to what we've seen in the past. These are around the risks of account takeover, of identity theft, of authorized push payments, and also various scams, linked to mule accounts. I think the hardest thing with open banking for banks specifically is going to be the lack of transparency. These guys have been used to knowing who the customers are, how they behave, how they transact, and so on. Now, having a third party in the equation, they might not have the same level of visibility as they've had before. So that lack of visibility could spell out more risk and could mean that fraudsters could exploit that to commit fraud as well. So specifically to open banking, the risks that have been ironed out are around the hijacking of those third-party players' access credentials. So when they authenticate with the bank's API, there's always a risk, to hijack those credentials and to steal data, and obviously to make fraudulent payments as well. You also have the risk of malware, but these are no different, I would say, to the risk nowadays. You always have a risk if you use your mobile banking app with your existing bank. You have similar risks that are coming into play as well. I think the other aspect to bear in mind is with any new channel, you haven't got the historical data that you have with existing ones. So let's say I use my card to make a payment, or I use my bank account through the internet banking portal to pay a friend. The bank has got my historical behavior. They know if this is normal or not based on my normal pattern of behaving or spending and so on. With open banking, you'll have less of that. So because it's a new channel, the behavior won't be mapped yet. So in essence, I talked about AI before. There are many types of artificial intelligence. In the world of banking, we've often relied quite heavily actually on supervised techniques or supervised machine learning. In essence, it means let's learn from what we've seen in the past to try and predict the future. The difference with open banking now, I think, is going to be to use more of unsupervised machine learning techniques. So basically, let's find some outliers, some anomalies in our data, which could be indicative of fraud without having to rely so much on that historical data. But in essence, it's not something which we've seen a lot of losses in the industry. So no major fraud cases linked to open banking because it's been so similar to the traditional means, of banking, and the fraud has been very similar as well.
Got it. Okay. So just to finish off, I have a question. I like to get insights from all of you. If people remember nothing else, what will be your main word of advice to decision makers that might be looking into evolving their analytics setup in the context of open banking that we've discussed? Starting from Carlos, what will be your key takeaway to the audience?
Okay. Yeah. So I think for me, the first thing that the audience needs to consider is to look for a strong partner with expertise in this area to support with the next steps, right? So for me, it's really key to have a company you trust and have experience about these. And a company also, you can share some responsibilities with around this new world that is coming for us, right? And second, be open banking and also be open-minded, right? So this will transform us in a positive way and bring us more benefits than challenge itself, right? So as Sandeep also said on his explanation now about the risks, it's just a new channel, right? So it's not a new system or something really new for the market. So it's just a new channel. So we need to consider that and follow with this mindset on this process.
And before you go, since you're Brazilian and you have expertise from this market, we hear a lot from Brazil-based players that the open banking implementation is generating some sort of complexity in terms of what it takes for consumers to embrace the model, partly due to lack of awareness or fear that data is going to be shared with outsiders. How should the institutions work around those hurdles?
So I think it's not unusual to have these fears, and we can see challenges like these around the world. So in my opinion, it's a learning curve and a process to re-educate your customer around the benefits they can take from that. So let's take a recent example that happened in Brazil with the introduction of the Pix payment system, right? There was a lot of materials created by the banks to explain to the customers how it works and how easy that would be for them. And now we can see that on the recent numbers, that Pix is growing really fast, right? And becoming the main way to make a direct transaction between parts now in Brazil, right? So this is fantastic. And again, referring to Sandeep, what he said about the risks, it's just a new channel, right? So, and the security red built behind the current system will be there working for the customers. So this is my advice.
Sure. Sandeep, what would you like to add as a final takeaway for the audience?
There are so many unknowns. There are so many things that, even banks here in Europe aren't fully, aware or haven't fully ironed out. There are many things which the regulators themselves haven't fully thought about. So it's very much a learning curve, So I'd say be flexible, adapt to changes, and overall be pragmatic. The thing is that you have the right data, you have the right partners to work with you, and we have all the right techniques in the industry, whether it's in terms of machine learning or of artificial intelligence, of big data. The whole infrastructure is actually here. It's actually using those building blocks to create something new like open banking. So that's my key takeaway.
Excellent. Alex, would you like to add some final points?
Okay, so it's up for me to close things out. And I would say to all thought leaders and business leaders watching this that I think you need to be two things. I think you want to remain relevant in your market. And I think events of the last year and a half have shown that you also want to have more resilience as well. That leads to agility and flexibility. You need to be agile and flexible to whatever is going to be thrown at you in the future. Whether it's a regulatory driven change to move towards open banking, whether it's the fact you've had to be working remotely during the course of the pandemic. But whatever it is, you need to be adaptable to your market conditions. Data is going to be continuously created. Analytics is here to help you extract the value from that data. The good news is that as you make progress on your open banking journeys, remembering it's a marathon, not a sprint, is that at every step on that journey, analytics is there with you, helping to guide you, helping to make the right decision for what you need to do next, and then what comes after that, and after that. So in an era when good news has been in relatively short supply, I think two things stand out. One is that banking has stood strong during this pandemic. And secondly, that we can start to imagine the post-pandemic world of banking, which is based on openness. It's also based on some other things. Inclusion, connecting those who are unconnected to the financial system, making sure nobody gets left behind. And I'll end, Angelica, just with what we're framing as the future of banking, which is based on being conscientious banking for people and for planet, where we can balance profit with purpose. And I think that's a good model for the industry to look at, whether you're in Brazil, the UK, or any market in the world, as we look to see as to where we need to move this industry to next as part of what's going on in our wider world. But maybe that's a subject for another day.
Yes, and remember, it's not a raging inferno, but a slow burn, right, Alex?
But that's my assessment. I could be wrong, but I think on this one, we can go at a nice steady speed rather than having to rush flat out before we really understand what's lying ahead.
Brilliant. Okay.
Steady wins the race.
Brilliant. So really useful insight on open banking that was definitely worth taking note. But unfortunately, that's all we have time for. So big thanks to all of our three panelists for sharing your thoughts. Much appreciated. And finally, most of all, thanks so much to all of you who have watched this discussion. Enjoy the rest of the SaaS Banking Summit Brazil, and see you next time.